Well, hello and welcome to another episode of the Legal Gym Podcast. I really need to come up with an intro for this podcast. I know that for the first 26th, well, this is now the 27th episode, I've basically just been starting by saying hello and welcome to another episode of the Legal Gym Podcast. So I need to do a better job with that. And if anyone has any recommendations of somebody that I can use to help me with that intro, please feel free to reach out. You can reach me on the DMs on Instagram at jim.hart. I want to thank you for joining me today. Today we're going to be talking about what you need to do to legally protect your business and save some money on taxes at the same time before the end of 2022. So these are going to be strategies that you need to implement this year within the next 3 months before the clock strikes midnight and we move into 2023. It's hard to believe it's already coming up on 2023. Anyway, the show notes for today's episode, which will include all the links and resources for everything that I'm going to be discussing today, as well as this entire list of things that you need to be thinking about doing before the end of 2022. You can check all that out at hawthornelaw.net/27. That's hawthornelaw.net/27. Let's go ahead and dive in. Before we get into the amazing content for today's episode, I wanted to let you know about a new training that I'm working on. I'm going to be teaching my 4R framework to get your trademarks registered quickly and easily. In addition, I'll be sharing the top 3 mistakes that I see online entrepreneurs make that can sabotage their brand and even force them into bankruptcy. So if you want to sleep better at night knowing that your brand is protected, you definitely don't want to miss this training. Just head on over to hawthornelaw.net/trademark to get notified when the training is live. One more time, that's hawthornelaw.net/trademark. And don't forget, everyone who attends this training is going to get a free gift. So if you're an entrepreneur who is building a brand online, this is one training you don't want to miss. One more time, head on over to hawthornelaw.net/trademark to get signed up for the notification list today. All right, so I made this list of about 8 things that you really need to think about doing to save some money on taxes before the end of the year. And the first one is probably one of the most important and is probably going to save you the most money on taxes if you do it correctly, not only in 2022, but in all the years to come that you remain in business. So if you already have your LLC set up, or even if you have a corporation set up, you need to run a profit and loss report and determine whether or not it makes sense to elect to be taxed as an S corporation. Now, keeping in mind an S corporation is not an actual business entity. An S corporation is a tax status with the IRS. And as an LLC, one of the nice benefits of an LLC is that you can choose to be taxed however you want. If you want to be taxed as a sole proprietor, you can be taxed as a sole proprietor. If you have partners in your business with you, then you can be taxed as a partnership. Both of those are, by the way, the default tax statuses. So if you are a one-man shop, or maybe it's a husband and wife team, you're going to be taxed as a sole proprietorship. If you have business partners, then you're going to be taxed as a partnership. And that's just the way it's going to happen, the default tax status. You can also elect to be taxed as either an S corporation or a C corporation. Now, I don't recommend most people be taxed as a C corporation, except for very specific situations, and I'm not going to get into those here today. But for most people, if you decide to elect to be taxed as an S corporation, the big benefit to you is that you're only going to have to pay self-employment taxes on the amount that you pay yourself as a salary, and any profit that you make over and above the amount that you pay yourself as a salary is going to be exempt from those payroll taxes, which, if you have a huge profit year, can turn into quite a large sum of money, because payroll taxes are around 15.3%. So if you think about it, if you made $100,000 in profit, then you're going to be paying around $15,300 in payroll taxes on that profit from your business. But if you paid yourself a salary of even $50,000, then you're cutting your tax bill by about $7,500. So I know this gets a little tricky and complicated, and you got to do some math. Suffice it to say, the number one thing that you can do to save money on your taxes that has has to happen before the end of the year is you have to think about electing S Corp status. Now, the reason I bring this up now is that it takes time to elect S Corp status. It's not something that's just immediate. You need to file that paperwork with the IRS. Chances are, if it's this time of year and you filed your LLC way back at the beginning of 2022 or even in 2021 or earlier, then you're going to have to basically go through some hoops with the IRS to get that S Corp for 2022, because you're going to have to do late election relief. And so there's a special procedure you have to follow if you're actually late to the game, because you have 75 days from the beginning of the tax year or 75 days from when you first file your LLC to elect that S corporation status. And so if you're beyond that window, you do have to ask for late relief from the IRS. There is a procedure that you need to follow. Feel free to reach out to me if you have questions about that. Now, if you're already an S corporation, or if you're thinking about forming an S corporation before the end of the year, you have to start planning to run your year-end payroll. Now, chances are, if you're an S corporation already, maybe you run payroll on a monthly basis or every other week basis or quarterly basis. It doesn't really matter how often you run payroll as long as you run payroll by the end of the year. Some people, they run one payroll at the end of the year in December, and that's it. That's all the payroll they're going to run for the entire year. And they do that because they're able to figure out what their profit was from the year, how much they've already run as payroll, and then how much they need to run as an additional payroll potentially, or maybe as the only payroll they run for the year. Now, when I say run payroll, what I really mean is this is an opportunity to tell the IRS and the state taxing authorities how much money you're paying yourself as a W-2. And typically what you're going to do is then you're going to pay all the taxes that you need to pay on that salary at one time. So you need to start planning now to make sure you have the money on hand to pay those taxes before the end of the year. And so if you pay attention, I'll include a link in the show notes page to a video that I did on the Profit First system, which if you follow the Profit First system, you should have a tax account that has plenty of money to pay those taxes at the end of the year, or like I said, quarterly or monthly, or however often you decide to run payroll. So that's the second thing you need to do, is you need to start planning for that year-end payroll. And again, make sure you have enough cash on hand to pay those taxes. Now, if you have a solo 401k, or if you're thinking about setting up a solo 401k because you are a self-employed individual, you can start making plans for how you're going to maximize your contributions to that solo 401k before the end of the year. Now, you can contribute up to $20,500 as an individual, plus your employer, which is ironically you, may contribute an additional 25% of your compensation, which again goes into, how much money you're going to pay yourself in terms of a salary for the year. So you can contribute an additional 25% of your compensation up to a maximum of $61,000 in 2022. If you're age 50 and older, you can contribute an additional $6,500. Now, keep in mind that although you can make those contributions next year in 2023 for the 2022 tax year, you have to establish that solo 401k by the end of 2022. Also, you need to start planning how much you're going to actually contribute to that 401k, because that needs to be, so for the $20,500 that you can contribute as an individual, that needs to be listed on your W-2 for 2022. And that is due to the IRS by the end of January in 2023. So you need to start planning for what that's going to look like and making sure that you've kind of got an idea of how much you're going to contribute to your solo 401k. If you decide to do a SEP IRA, that's okay. Usually those are for people who are self-employed, but maybe they also have some employees working for them. You can establish those up until, I believe, the time that your business files its tax return, which is not going to be until next year. And you can also contribute the funds to that SEP IRA next year as well. Now, the next thing that I have on the plate here is number 4, and that is to sell your losers. So what do I mean by that? I mean, if you have an investment portfolio that is in a taxable account, and so you can go ahead and look at what there were a lot of losses in 2022. The stock market did not do very well. So take a look at your investment account and see if there's areas where you can sell stocks that have lost a lot of money. And by doing that, you can then harvest those losses that will offset your income for 2022. Now, if you do decide to do this, there's a couple things you need to be aware of. Number one, you should time your sales to happen before, if you're in mutual funds, before those mutual funds issue their capital gains for the end of the year and their dividends for the end of the year. So you don't want to, if you're holding those securities when those dividends and capital gains are dispersed, you're going to be taxed on those, but it's not really going to have a huge impact. It's not going to change the value of your stock at all, because what happens is the share of if a mutual fund is trading for, let's say, $10 and it declares a $1 dividend, well, it's going to change the share price to $9, and that $1 dividend is going to be reinvested into additional shares. So it's not going to change anything there, but it is going to cause you to incur some taxes for 2022, potentially unnecessarily. So if you have mutual funds that you're holding, or even stocks that you're holding that are going to be paying out dividends or capital gains at the end of the year, you want to make sure you sell those losers before they pay out their dividends, and then you want to stay out of that security or security that is similar to that security for about 30 days. That way you avoid wash sale rules, and then come January, after those dividends have been dispersed, you can go ahead and get back into and rebalance your portfolio back into those securities with the losses secured for your tax bill for 2022. Hopefully that makes sense. And so that kind of goes in line with the fifth tip I have for you, which is to wait to rebalance your investment portfolio until all of the capital gains and dividend distributions have been paid out for the end of 2022. And so at that point, you're taking advantage of getting out of the securities with losses, rebalancing at lower prices, and now you're set for hopefully a rebound in the stock market next year. Let's see what happens. I am not a financial advisor, so I have no idea if that's going to happen. But anyway, that puts you in the best possible position moving forward. So tip number 6 is to delay income if possible. Sometimes this is possible, sometimes it's not. If you're a business that gets paid with checks, then or you send out invoices in December, send those invoices out, but ask people not to pay you till January. Or if they pay you a check in December, hold those checks to cash until January. Another way to do this is if you're an online business and you sell courses or memberships or things like that, and you can do a trial promotion or a free promotion where people will join and they get 30 days free or something like that, and then they don't start paying until January. That's another great way to delay income and get a flood of new customers to your business before the end of the year. So, and just wink, wink, nudge, nudge. That's something I might be doing with my OB Foundations membership, which is, if you're not aware, a membership community that I run that helps to give people legal tips and business guidance. And we do monthly coaching calls and all sorts of fun things in that membership. I'll include a link to that in the show notes page. So along those lines, number 7 is going to be to go ahead and accelerate your expenses. So if you have extra cash on the books and you've already optimized your 401k and you've already done your year-end payroll and everything like that, and you still have some extra cash that you really want to put to use to help save some taxes for your business for 2022, you can consider prepaying your expenses. And so this might be, if you have rent that you pay, you could prepay your rent for January or even January and February. You could prepay some utilities. If you needed to upgrade a computer system or something like that, you could go ahead and do that before the end of the year and take a deduction there. So there's a lot of ways that you can accelerate some expenses for 2023 by paying those expenses in 2022. And then finally, number 8, the last one, is also to maximize any work-related expense deductions that you might have. And so some other areas where you can deduct some expenses are transportation and travel expenses. This is the mileage deduction that a lot of people forget about. Meals and entertainment, you can take some clients or colleagues or referral sources out to eat, and and deduct some of those meals and entertainment for the end of 2022. If you have professional dues you have to pay, you might want to get those paid in December rather than waiting until January. If you have insurance that you can prepay for the next year, that's something that you can do. If you have legal fees, this is another great one. So if you're thinking about filing that trademark and you want to take a nice little deduction on your taxes, then you can hire us here at Hawthorne Law to help you with your trademark needs and also deduct those legal fees from your income for the year. In addition, if you wanted to get into a course or a membership or something like that you're thinking about investing in, or even purchasing legal templates. I know another place that offers legal templates at onestoplegal.co, and I'll include a link in the show notes page. Anything like that you want to invest in for your business that you think you're going to need moving forward into next year, this is a great time to pay for those things and also get a nice little deduction on your taxes as well. Work-related education. So this might be conferences, continuing education, things like that we already kind of talked about. You can prepay for those things in December for 2022. So that's another great way to save some money on your taxes. If you are interested in learning more about how to legally claim the rights to your brand, then you're going to want to schedule a free branding strategy call with me. That's right. For a limited time, I'm offering a free strategy call to talk with me about the branding for your online business and how to make sure it is legally protected. So if you'd like to learn more, head on over to hawthornelaw.net/TM-video. Once again, that's hawthornelaw.net/TM-video. On that landing page, we have lots of great information about the process of protecting your brand so that you don't have to worry about getting a cease and desist letter or being forced to rebrand your business at a great expense. Once again, that website is hawthornelaw.net/TM-video, and I look forward to talking with you soon. All right, all you Legal Gym listeners, now that you know more about how to save some money on taxes before the end of the year, you are definitely ready to implement, because if there's one thing we love to do over here at the Legal Gym, it's to take massive action and work out those legal muscles. So if you haven't already, make sure to check out the show notes page for today's episode. You can get a rundown of all the links and resources that we talked about here by visiting hawthornelaw.net/27. That's hawthornelaw.net/27. And that's going to be the home base for all of your legal and business tools and resources to help you start, build, and yes, protect your online business. Thank you so much for listening today. I look forward to seeing you in the next episode coming up next week. Take care, folks. Bye-bye.